This is your LMAX exchange technical update for Friday, April 7th, 2017. Eurodollar. The market right now is trying to figure out whether the euro is in the process of resuming a broader downtrend or if we're looking for a higher low now ahead of a resumption of a recent up move that resulted in a 2017 high at 109.06 after the market took out some key inverse head and shoulders neckline resistance around 108.75. So we have to pay attention to some key levels over the coming sessions to help determine the outlook. At this point, despite this latest round of setbacks, we could still see a higher low above the 104.95 critical higher low that we saw back on the 2nd of March ahead of the next major upside extension back above 109.06. If that's to play out, the market would likely find some support down and towards this key area around 105.80, which is representing a confluence of the 78.6 Fib retracement off of the 104.95 to 109.06 move and the bottom of the Ichimoku cloud, with a break below there to negate the possibility or to compromise the possibility of a higher low and put the pressure back on a retest of that critical 104.95 low. So over the coming sessions, keep an eye on 105.80 below. If the market establishes a close below that level, it could likely open an acceleration of declines towards 104.95, which guards against that multi-year base at 103.41. If, on the other hand, the market is able to hold above 105.80 on a daily close basis, we could see the market reverse back and put in this higher low ahead of a continuation of gains. Key levels to watch above on a short-term basis is that 107 barrier. If the market establishes a close above 107, that would also strengthen the possibility for a higher low. Sterling dollar. Overall, cable remains confined to a very well-defined downtrend with rallies well capped into the 125 to 127 area. And while the market holds below that December peak at 27.75, there is risk for continued downside. On a short-term basis, it would take a break back below 23.77 to strengthen the bearish outlook and open the door for a potential retest of that 2017 low at 119.87 from back in January. Any resistance the market should be very well capped in towards on a short-term basis. Key level to watch right now is at 26.15 with a break above that level to suggest that the market could see another push. But again, only back above 27.75 would compromise the bearish outlook. Dollar yen. So dollar yen has been in the process of consolidating after breaking down below a significant multi-week range defined by support at 111.60. That range was a 400-point range between 111.60 and 115.60, and so the break of that range suggests a measured move downside extension towards 107.60 over the coming days. At this point, only a close back above 112.20 would compromise or delay this bearish outlook. Euro Swiss. Euro Swiss continues to be trading within a downtrend with a now fresh lower top sought out at 108.26, which will be confirmed on a break below the 2016 low at 106.24, exposing a drop down towards a measured move in the 104 area. Aussie dollar. So Aussie has been under pressure since stalling out yet again into the ahead of 78, this time at 77.50. That's the 2017 high, and the market could be poised for deeper setbacks if it breaks down below critical short-term support at 74.92 going back to the 9th of March. A break below that level will open the door for an acceleration of declines back towards the 75 area, towards the 70 handle. Dollar CAD. Dollar CAD has been very well supported on dips over the past several months, and once again the market has found some support, this time around 132.64. That's the low that we saw back on the 21st of March, and a fresh upside extension could be seen if the market establishes back above key multi-day resistance at 136, which would open the door for an acceleration of gains towards 140 further up. Only back below 132.64 would delay the bullish outlook for dollar CAD. Kiwi dollar. So Kiwi continues to show signs of topping out after the market stalled out in 2017 just ahead of 74, and this latest round of gains has been very well capped ahead of 71. A fresh downside extension is expected if the market can establish below 68.62, which is some medium-term support, exposing a drop down towards 65 further down. Any rally should continue to be very well capped, ideally ahead of 72. SPX 500. The S&P 500 is in the process of consolidating off recent record highs, but this consolidation could turn into a legitimate correction lower if the market can break it back down below 2320. A break below 2320 would confirm a fresh lower top in place around 2380 and open the door for a measured move downside extension towards 2270. At the same time, inability to establish below 2320 would keep the pressure on the top side and suggest that the market could still be poised for a fresh upside extension beyond the record high at around 2400 and towards the next major upside extension into the 2485 area. Gold. So gold continues to trade with a constructive tone, with the market making a series of higher lows and higher highs off that 2016 base just shy of 1100. This most recent higher low has been confirmed at 1195 following today's break to fresh 2017 highs beyond 1265. This now opens the door for a fresh upside extension towards a measured move objective at 1335 over the coming days. That's just shy of the 2016 high at 1375. Ultimately, only back about below 1180 would compromise the constructive outlook for gold.